Hello, welcome to the Quick Start video series. In this video I'm going to go over the MarketColor state and show how you can use it as the basis to create a structured trading approach. We're talking about the state of a market. We're talking about the underlying technical condition. You can think of it as kind of the underlying macro strategy. What is the environment? Most traders view the market either trending or non-trending. JS Services MarketColor state identifies 26 unique states and presents them in a color code on the MarketColor grid, so you can quickly identify different states. You can almost think of it as if you're playing a game and you're going to choose what environment that you want to play in. Do you want to be in the jungle, urban setting, winter setting? You're going to have different gear for each condition, and markets are the same. If you're trading one market, you're just presented with this is what the condition is, but the desktop application also allows you to trade as a strategy based on the condition, so you can identify specific conditions where your strategies work the best or where you personally like to be, where you like to trade. What we're really talking about here is context. What context is the market trading in? This is really the foundation. If we're painting a picture of what the environment is of a market, the first coat of the base coat is the market state. And that's where everything else is going to play on. It's going to play on top of that state. And so understanding the nuances of that condition is critical. And each market state has three core concepts. They are the state characteristics, its attributes, and expectations. So this is the context, the interrelated conditions in which something exists or occurs, the environment, the setting. We can create a structured approach by standardizing trading methods to the context that defines the market state. As traders, you really need to own the environment so you can trade more intuitively. The more you're into it, the more you understand the granularity of the condition, the more you'll naturally pick up on the nuances in the marketplace. It's not that these market states are that complicated or different. We've all experienced these states at one time in our trading. But with the MarketColor state analytics, you have that at the start of the session. So that allows you to anticipate price movement and also identify, is the market performing to the expectation of the state or not? And if it's not, that means it's in transition. And so during the characteristics section of the desktop, we go through what does it really mean to be in a bull trend. And these definitions, if you sat down and thought about a bull trend, you're going to come up with the same thing because these are market truths. It is what it is. Market in a bull trend is typified by a market that continues to make higher move highs and higher move lows, or positive structure. That's the definition of what a bull trend is. If the market's not doing that, and it's breaking structure, then it's no longer in a bull trend. It's not true. And so the market's telling you that it's transitioning from one market state to the next. But when the markets transition from state to state, when they move out of a bull trend state, they typically move out in a certain fashion. And after a failure or break in the positive structure, it's more likely to produce a neutral shift rather than a negative transition. So if we're in a bull trend and we break structure and we have a sharp break against that trend, corrective break, it's usually a break into a neutral digestion than transitioning into a negative trend state. So this is important when you're trading the market to give you insight to what's happening. If it's holding structure, your expectation is higher move highs, higher move lows. If that changes and we get a break in structure and we get a vicious break, our expectation is that break is going to stabilize and not follow through. And what's more likely to happen is that we bounce back into a neutral trade. These are the characteristics that define what a bull trend is. So we can take these characteristics and align our trading tactics to them. So continuing to look to fade negative breaks as long as the breaks are above positive structure. And if we do get a break-in structure and we're going to accept a sell signal, the expectation is that we want to take our profits quickly because we're not expecting any follow-through. By standardizing tactics to these facts, you create structure that's aligned with what's most likely to occur. Every state has its own set of attributes as well, which are more general characteristics. Based on momentum, does the market have good momentum or not? Is volatility expected to increase, decrease? Is there a specific bias to this market state? What type of state is it? And so for a bull trend, it has good momentum. It's a trending market. Volatility is expected to increase. The bias is positive. And it's a positive trend type state. So when you're standardizing your trading tactics, you can standardize them based on specific attributes. So if you are a trend following trader, you're going to like markets that have good momentum. If you like to sell premium, you're going to want to avoid markets that have volatility, that expectations are expected to increase. By standardizing your tactics to specific attributes, they can be applied to multiple market state conditions. And lastly are the state expectations. So we present them graphically. So a bull trend, we're anticipating the price action to look like this. Higher move lows. Sometimes you're having some big pullbacks, but the market is trending higher. It's a bull trend. This is a classic bull trend. This is the expectation. As long as the market continues to hold higher move lows, higher move highs, that's your story and you're sticking to it. This is the expectation of a bull trend. This is the picture we anticipate to see in the intraday price action. And if we don't see it, it's giving us a tell that maybe this market state is in transition and we're no longer in a bull trend. There are 26 unique signature market states, and you should be comfortable with all of them. And as a trader, you've experienced each and every one of these states. We're just reminding you of what those states are and what the characteristics, the attributes, and the expectations are of the different states. We've all traded a bull trend or a bear trend, or a bear trend that's accelerating, or a bear trend that's correcting, or a bear trend that's at an extreme, or a market that's in a neutral digestion. And as you go through each state condition, you want to identify the attributes, the characteristics, and expectations that best align with your trading tactics. The desktop application integrates the MarketColor state analytics into your workflow by color coding the different state conditions. So if we go through here, we start out with the S&Ps, which are in a bull trend acceleration. Characteristics of a bull trend acceleration are that the market has produced a major positive technical signal and it will follow through immediately if valid. So this is a big statement. So if this market state is going to be true, and we should have an expectation of an aggressive higher move low, higher move high expectation, then we would anticipate this market to follow through immediately. And we would expect this positive market structure to steepen with negative pullbacks shortening in size and duration. That's what it means to be in a bull trend acceleration. And if not, then the prior period's move may be it. You had a big technical signal, and if it doesn't follow through, that may have been all that we're going to get, and that's all the excitement, and with a break in structure will signal a digestive trading condition. So these characteristics are identifying the tells to look for to make this statement true, and if it's not true, it's going to give you insight to what kind of session should we anticipate? A digestive session if we can't hold structure. What are the attributes? In general, this is a great momentum market. With the expectation that it's performing to the expectation of the state, be a good momentum, good volatility, positive bias, positive trend. And here's the price action for the session. So here's midnight. You always want to look back and take a look at what's been happening trading overnight, or if you are trading at the start, how is the market performing? And as we see, the market does not look like this. Right from the get-go, the market is moving lower and not looking like this. And so this action here is a tell that sets up this day of sideways action, of going nowhere, of digestion. We're always looking to what is true. Is this statement true, the bull trend acceleration? And at this point here, no, it's not true. It's not performing to the expectation of the state. So then we know that this market is in transition. And when bull trend accelerations transition, they usually fall back into a digestive trade. And that's what the market did, and that's how we want to adjust our expectations. Heating oil, gas oil, and the RBOB are all in bull trend acceleration market states as well. So again, this is the foundation. The technical foundation for these markets are the same for this market. They have the same expectation. This is the beauty of being able to standardize your method and have more of a strategy-based trading approach. Identify characteristics and attributes and expectations that work well with your strategy and work well with the way you like to trade. And by always putting yourself in the same environment, all of a sudden things become clearer and you'll be able to anticipate opportunity. Here's the RBOB, and it started out the session firm. Here's 12 midnight, and then here we have a break in structure. So at this point, when the market stops making higher lows and higher move highs, it's the tell that this is no longer true, because we're always looking for a textbook expectation. And so at this point, it tells us that this market's in for a corrective pullback, a digestive trade. We've gone through the R level, and this market makes a play back down to the structure point, which is the expectation of any break in momentum. We would anticipate that break into momentum to go back to sentiment, to go back to the R level. But this was the tell to set up this day. As I mentioned before, the attributes are more general, so other market states are going to have similar attributes. A regular bull trend is going to have identical attributes. A market that's in a neutral positive transition is going to have similar attributes, but it's a little different. This is a market that's in transition. The expectations are for this positive signal to follow through with the potential to be the beginning of a new bull trend move. And the tell is the market's ability to hold structure or not. As long as the market is working positive structure, the trade vision is an extension higher. That's your story and you're sticking to it. As long as it's building higher move lows, higher move highs, you're rolling with it, anticipating this market's going to transition positive. Once the momentum's broken, a difficult trade should be anticipated. So if this market can't hold this structure, the expectation is it's going to fall back into more of a neutral posture. And here's the natural gas. The R level identifies that structure point. Above that price point, this positive momentum is in play. And then we can see intraday the market is just continuing to build positive momentum and make higher move lows, higher move highs, and accelerate. We have this positive transition. This is our expectation. That's our story. We're sticking to it. We have our trade vision, and we should always anticipate the market to perform perfectly. If we open a book, the price action should look like that, and that's your trade vision, until the market tells you otherwise, until the market starts to break structure. So you have this market state as your base coat. This is your foundation. You go through the characteristics and understanding the nuances, what to anticipate. It has its general attributes associated with it, and then you have a price expectation. So you have your trade vision. And then in real time, you're watching the market, and the market's holding and building structure. You have your trading tactics aligned, and you create a structured approach to whenever a market is in a neutral positive transition, or whenever it has these attributes or this expectation, this is what I do. I'm looking for this move. And how can I participate in that move? This is a get on the train move. As long as the train's moving, you need to jump on. You're not going to get the pullback. If you're getting a pullback in this type of a market state, you're going to lose money. That's the tell that the market is ready to correct. As long as it's working positive structure, you're working that trade. You're working that momentum. The analytics are transparent, and so if you want more detail as to why is this market in a bull trend, what are the real technical guts supporting the reason that this market is in this market state, we can look at the state indicators and the technical profile. And so the market MCS, the market color state, is UPT, which is our tag for bull trend. It has a MC value of 5 and an MC value change of -2. And so the MC value is a summation of this color profile, and MC value change is the change from the prior session to today that resulted in this market state. You can find this information under the Structure tab, and if you want to learn more about MarketColor, you can click on the Help tab and go through all the different MarketColor features. It talks about the MC value change, and then all of the different MarketColor states. Also goes and explains the MC value plot, and you can use this color profile and the MC value plot to get additional insight to the what is happening in this market. What are the technical guts? What are the little nuances, the little differences? And natural gas was the one market with the same attributes that really performed. And we can see in its color profile that it had a positive signal in its slow stochastics. So it had a turning point signal that generated this. And on this plot, we can also see that the market's coming out of a negative situation, and we're potentially transitioning higher. So this could be explosive. We kind of caught people short. They tried to get, started to transition here, went back, a little bit of a head fake, and now we're in potentially a positive transition. And if this market's going to follow through, it should hold structure. Here's our R level, and we can compare that to the RBOB, and it had positive signals. So the market jumped out of the neutral zone, and it was prove it to me. If this market's going to go, it should just continue to shoot higher. And the market ended up stalling out at the upside pivot, which was the confirmation point of that positive signal. The fact that this market had a brown ADX is telling us that there's not a lot of follow-through potential. So you can use the color profile to get additional insight into what's happening. The S&Ps had a positive signal, turned it into a bull trend acceleration, and we have a solid bull trend, and we have the RSI that's a little overbought. Not that big a deal, but just something to be aware of. If it wasn't overbought, it'd be add value to this signal. These technical signals can be used as a criteria filter for your tactics. If you're getting a buy signal or a sell signal for a trending market and it has a brown ADX, and we know that a brown ADX means neutral, and we want to see a purple ADX, that can be a way to standardize your approach. I'm only going to accept those signals. Now you might miss some. You're definitely going to miss a lot of new initiation trades, because a lot of times the market digests and goes sideways and is in neutral, and then it transitions like the natural gas here, where it has a brown ADX. The markets that have a purple ADX are going to be typically more established trends. You can use the grid to sort by different indicators. One I like is the dynamic channel, Bollinger Band, especially when the markets are in a yellow condition. And this tells us that the market's at an extreme. So here we have a market that's in a bear trend and is being pushed to the negative extreme. So the attributes are kind of the opposite of the bull trend for the bias and the trend expectation, the type, but it still has good momentum and good volatility. And this tell here is telling us this market's overdone. And here is kind of a classic example where the market starts to trend lower, and then you have this dramatic reversal that doesn't follow through. A lot of emotion, and now it's going to fall back most likely into more of a digestion, but you have this sharp spike. But this is where the technical profile gave you some insight to have the potential expectation. So as the market's moving lower, this is an extreme, and you're anticipating a sharp reversal signal. So in this condition, you can follow this new weakness with a reversal strategy based on this dynamic channel. So you can standardize your tactics to these different indicator signals, and then you can use the grid view, different views, to identify, okay, this market is in this condition. It's important to remember that these indicators are just components, so they're going to be the kind of the lowest level of the environment. They're additional details. So the bear trend, you can think, it's painting everything red as a bear trend. That's the real foundation. This is, these characteristics of the bear trend are primary. That's going to be the primary colors, and then you have your expectations and your attributes, and then the technical indicators are starting to provide more granularity, more detail. And so these things are things to look for, but they should not take away from that bear trend. This market can continue lower as long as it's making lower move lows, lower move highs, and those characteristics are true. This market can stay, at an extreme and continue into an extreme. Remember, the market state and the state indicators and technical profile, these form the foundation. So they're forming this foundation, this strategy base. This is your fact foundation. And by aligning your tactics with these characteristics, the attributes, expectations, and even getting into the nitty-gritty of the guts of the technical profile, or even the shifts in the indicator itself, what you're doing is you're aligning your tactics with what's most likely to occur. These are the facts. This is what it is. And when you do that, you're going to find that your strategies are going to be more consistent. And not only more consistent, but you have a benchmark to know if they're working or not, because for a fact this market is in this bull trend acceleration, or it has this positive bias, or it has good momentum expectations. And so with this benchmark, as you make changes to your tactics, you can see the results. Did that work in this condition? And that way when you're trading in a market that's got a positive bias or positive expectation or good momentum, or it has these specific characteristics, it allows you to really see what works and what doesn't work. It allows you it gives you the clarity to know that, yes, this market is performing to expectations, so this is what I should expect. It should look like this. And if it doesn't, then something's going on. And our market is either going to be in a transition, or we're going to have what we call more of a non-event. And we need to readjust our expectations to that fact. Again, you can use the help tree for more information on market state and MarketColor, the different market state tab, and it kind of goes through all the different pieces that talks about the different descriptions, expectations, and all the different attributes. If you have any questions, please email us at info@jsservices.com.